What's happening, traders? And we are back with episode 2. Now, this guy's name, I do not even want to try and say it because I feel like I will butcher it to hell. So let's just call you LM. Okay, and LM seems to be struggling with finding good entries and SL placements and stop loss placements when the market reaches a supply and demand zone. Now, LM, the main thing about the event chain is helping you filter out weaker supply and demand levels so you don't have to think if this is a good level or not. The event chain will tell you whether it's a good level or not. Right. So we're always looking at extremes of the market when we are looking to play a supply demand level, because a level that is in between an extreme high and an extreme low is always going to be less advantageous than one that's at an extreme high or an extreme low. So here we are kind of like in real time. Just recently on the euro yen, and you could potentially look at this and think to yourself, this is messy as hell. I really want to become a day trader because there are some silly opportunities day trading that were just like, oh my goodness, is ridiculous. I really do want to become a day trader, like really. Like really. But with this, like looking at this looks messy as hell, right? This looks so messy, it's just like you wouldn't even know where to start here, right? But playing the event chain here is is absolutely possible, right? So let's just dive into this real quickly. And let me just do a little better so you guys can see. So first of all, we're going to look at this 4-hour zone right here. And I'm just going to take this back to here so we can actually see the entry and play it out ourselves, right? So let's just grab this. This is where we're going to mark up our engulfing. Okay, that didn't work. Let's mark up our engulfing here. This is going to be a demand area. All right, perfect. So this has left a 4-hour engulfing structure. It's moved up nicely, just taking out the highs of this one here. Not that we're focusing on that anyway. We're really looking as the market's coming. We can see that we have a bit of friction here, right? Let's just mark that out so we can see how that plays out later on. Let's just call it a bit of supply there on the H4. So when the market enters here now, we want to drop down to either the 15-minute or the 5-minute. Now, the higher the time frame, you're always going to get a more defined opportunity. You're always going to get a better opportunity to get in. The lower the time frame, slightly more noise, slightly less effective, but still very powerful if you've got the right level in the first place, right? But this will give you that definition of that level. So we're on an H4. So the market's moved nicely into this H4 demand zone. So let's go down to the 15-minute chart. Now, as we can see, as the market moves out, we're looking for an event break. Our event break is usually a bearish engulfing structure if the market's coming into demand, and it's a bullish engulfing structure if the market's going into supply. So the market's just come into demand here, and we have our first area for our event break, right? Now, there's been no friction here and the market's moved past it, but what do we have at the birth of this break? We don't have a bullish engulfing structure to take. There is no structure here at all. So this area here is invalid. There's nothing there. So let's just play this out. Where am I? All right. So we can see we've got some structure here also that has held. And as all you're doing is simply marking off and we've, is that some, yeah, that held. We've got some structure here too. Now these ones with long wicks, I don't expect them to hold. Holding for now. Okay, broken completely, right? And we have some good structure down here as well. We've got a drop, we have a base, and we have a rally straight through this event break area here, right? And yes, we could even say that that has just literally touched that event break up here, but we are always looking at the event break closest to price. Okay, I cannot say this enough. We are always looking at the event break closest to price. So basically, so if this held and then pushed through, then obviously it would make this H4 zone invalid, right? Because it just couldn't push through it. There was so much strength here to hold. There's so many orders pushing this down, it wouldn't be able to get through it. But the closer it is to price, the more friction we have, and that break gives us a really good indication that we're in the right place. So now we've got our base instruction. Now you could do two things here. Number one, you could place it, let me just draw this in here. You could place it here with this basing, but for me personally, just in case, I would like to take it down all the way to the bottom, just to this level here. Let's get our long position tool. And that is a risk of 25 pips. Now, where do we want to take profit? Where would we like to take profit? Let's zoom back out to the H4. Now, ideally, if we can pass this friction, we want it at the top of this area here. So let's just say, just for ease, right? Because this is a short-term trade. We're not trading at a daily level here. We're trading at H4 level here, right? So just for ease, 263 pips at this level here where the market reached up before, perfect area to take profit from. If it passes this area here, which you can keep an eye on, then we're definitely going to make it through this because we've got all red candles up there, right? So let us drop back down to the 15-minute and let's continue to play this out. Nicely, so it's broken through that level as well, but we can see it's touched that level there. It didn't break through that yet. Well, so that has entered our zone. We are triggered now. And now it's broken this area here. So now we know that this H4 level here, yep, we're good to go. So let's just let it play out. Let's move this across a bit. And let's just, it's moved up there already. Okay. And bingo. We have a 263 pip trade just like that, while risking 25 pips with a 10-to-1 risk reward ratio. So even in that mess of candles, there is opportunities to use the event chain and play the market how you like. So that's just one example of how to find great positioning, great entries with really tight stop losses to enter the market at extremes and get some good profit. I hope you got some value from this. I will see you tomorrow.